Good morning, good afternoon, good evening, wherever you are in the world. Thank you so much for joining us for a webinar to meet and hear about the CFI Fellows Program, the topics that we're exploring in the coming year, and meet the fellows themselves. We're looking forward to getting started in just a few minutes, but while we wait for everybody to join us, I'm going to put a poll up on the screen so we can see who's here. While we get that poll up, I'll introduce myself. My name is Sonia Kelly. I'm the Director of Research at the Center for Financial Inclusion. I manage the CFI Fellows Program and have been involved since the beginning, and I'm just thrilled to share the research that we're going to be doing this year with you and the fellows themselves. So we've got a poll up on the screen to ask which of these categories best describes you. So you can select one or more of the following options. The first one is, are you a donor or investor or multilateral? The second one is, are you a financial services provider or support organization? The third, are you an academic in the academic community, or are you part of a think tank? And the fourth, are you part of the government or the public sector? The fifth selection is other. So go ahead and make your selection. I understand that we had to combine categories. We're constrained by the software here and had to put a few slashes in there, but feel free to answer it as best as you can. Again, good morning, good afternoon, and good evening, wherever you are in the world, and welcome to our webinar exploring the CFI Fellows Program to hear about the fellows that we have joining us this year and the topics that we're going to be undertaking. I'm Sonia Kelly, the Director of Research at the Center for Financial Inclusion, and I work on the CFI Fellows Program. We've put up a poll on the screen so we can know more about who's joined us today, and we're going to put up the answers to that poll now so you can see who the folks are who are joining us. So it looks like we have a really nice balance. We have mostly people who are financial services providers or support organizations. 33% of you are at think tanks or in the academic community, which is, to be expected given that these are research questions. We've also got donors, investors, multilaterals, and a few folks from the government or the public sector. A lot of people are others, so I'm looking forward to hearing your questions, given that they might be coming from somewhere else beyond those four options. So let's go ahead and get started. Thank you so much to the fellows for joining us. We're going to hear from them in a few minutes. Let me just go through a couple logistics before we jump into the content. You have some buttons on your control panel that include a mute button, a hand raising button, and then you have a little box where you can ask questions. And we're going to be asking questions throughout the presentation. If you're somebody who has a microphone, you can go ahead and type your question in there, and then we'll call on you and turn off your mute from our end. If you want to raise your hand, you can do that as well, and we'll message you and ask you if that was on purpose, and if you want to go ahead and ask a question to one of the fellows. We're going to be covering a very wide range of topics, and so based on past experience, we may have more questions than we can answer, and if that is the case, we're going to be sure to follow up with you after this webinar. So go ahead and be brave, ask as many questions as you want, and we'll follow up with you later if we don't get to the questions during this session. I'd like to turn to our Managing Director from the Center for Financial Inclusion, Beth Rhine. Beth works to bring together diverse leaders to address challenges in inclusive finance in her role as Managing Director, and she's the one that is sort of the brains behind the Fellows Program. She set out to answer some of the toughest questions facing the financial inclusion community. So let me turn it to Beth to talk a little bit more about the history of the program and why the topics are important this year.
Thank you, Sonia, and welcome everyone. This is the second year of the Fellows program, and the first year was we've really been excited and enjoyed working with the fellows, and we think that the results that they've come out with during the first year have been very important, and we're still continuing to work with the first year fellows. But now we're well on our way with the second round of fellows. CFI is a group, a subgroup, a think tank, an action tank, you can call it what you want, but what we are really about is engaging and challenging the industry, to the financial inclusion industry, that is, to really ask itself hard questions and make sure that it's staying on the right track. And we also are very dedicated to protecting and empowering consumers. And I think you'll see both of those aspects in the list of questions that we've put forward for the fellows. So we want to challenge the industry to see, are we on the right track? What's going to happen next? Look to the future, and how things that we see now are going to evolve. In order to establish the topics that we have now selected, we did consult with quite a few people, both inside the center and outside the center. I hope some of you may have contributed your thoughts, and I hope you're okay with the answers that we came up with. The idea is to ask specific questions that are very important to practitioners and to policymakers. And we want to engage with some of the most important researchers, most qualified researchers in the field, and we want to ask the questions that are really going to make a difference. And so we ended up, after consulting with people, coming up with a set of topics which we put out to the public to say, please come in with proposals. We got 36 proposals, or maybe it was 35, and we selected the fellows that you'll meet today. We have 5 topics: responsible digital credit, data security for mobile credit, human touch in a digital age. There we have 2 topics on that in different locations, and the business case for financial capability. So I think you'll see a strong theme there, both for client empowerment and protection, and for looking at how the field will evolve. I think that's what I wanted to say by way of introduction. I'm looking forward to hearing from the fellows.
Great. So enough of introduction. Let's talk about these topics themselves and meet the fellows. I'm going to turn first to John Owens, and you can see his bio up here on the screen. I'm not going to read it verbatim, but I would like to introduce him, and while I introduce him, we're going to try something new. We're going to try to get his video feed up here so that you can actually see him while he's talking, so we don't have just a bunch of talking heads. So while we get his video up on the screen, I will go ahead and introduce him. John has a background in law as an attorney and a senior advisor. He's worked at USAID, he's worked at AFI, he's worked around the world on financial inclusion, on topics ranging from digital financial services, digital payments, agent networks, and his career spans 25 years. Instead of listing all of the places where he's worked, I will just say there are very few places where he has not worked. I guess Antarctica is a place where he hasn't worked on financial inclusion policy, but beyond that, he really his experience is global, and that's why we selected him to look at responsible digital credit. So, John, could you just share a little bit about this topic? The question is, what does responsible online credit look like, or digital credit? And share a little bit about that question, but also how you intend to find out the answer to that.
Okay. Well, thank you, and thanks to Beth, Sonia, and the whole center. I'm very pleased to be joining as a senior fellow, and thanks to everybody who's listening this morning. I think when we're looking at this whole new space of digital and online lending. You know, we've seen this opportunity, a lot of uses of alternative data-based lending, which is opening new and innovative credit opportunities, not only for SMEs, but also for individuals. And there are a lot of challenges. We have new technologies as well as many new providers who are coming in. So this creates challenges, you know, on the issue of consumer protection. Also, I think many of the providers have realized that in order to continue and we see the providers getting together and looking at this issue of, you know, trying to protect the industry to show, I think, with people who are, particularly for online credit, people are more connected. Consumers are demanding more. They do want to see sort of a good seal of approval. So there's a lot of discussion within the industry right now, particularly in the more developed markets where we see a lot of more of the peer-to-peer lending. So that would be in mostly in Europe, China, the United States, but also in some other countries where it's just beginning to emerge. There's lots of discussions in places like India right now in terms of India and Indonesia, for example, you know, looking at this whole issue. So what I'm trying to do is look at the industry, look at some of the examples that are occurring around the world. You know, the people are looking at building trust and confidence. So I'll be researching, discussing with the industry, looking at the industry associations that have formed around this, looking at some of the regulatory policies that are developing, and kind of learning what we've learned from basic lending that, of course, most of it does apply. There are just some unique areas that I'm trying to focus a little bit more attention on that are more unique to the challenges of the online space in terms of lending.
I liked how you shared, John, that it's sort of an extension of the lending that's already happening, and I think that is certainly something to acknowledge. You know, sometimes I think in the industry we say digital financial services and we treat it like this whole new thing that that's just been discovered, but as you rightly say, it's just an extension of what we have been doing. But I do think that digital credit is a really messy space. There are a lot of new players operating in many different ways. And so how are you defining digital credit in that messy space? What are the implications of that definition? And sort of like, what does it leave out and what does it include?
Okay. Well, in kind of the online space, you know, we're looking at, you know, the move to providing, these could be traditional players as well who are using online tools for lending. A lot of these are the formation of partnerships. So we see, for example, particularly in the mobile database lending space, particularly in East Africa where a lot of this has happened, there's a lot of work that's involved. Many of them are non-banks, but there are several. The bigger ones, of course, are partnerships between, say, mobile network operators who have a lot of information on clients and customers, and banks like the Commercial Bank of Africa's Mshwari would be an example of that. We also see the other group is sort of the peer-to-peer marketplace lenders, and you kind of have two different categories there. Ones that are just basically helping people who want to lend to somebody else, and so you have the P2P lending that's going on, and then you've got the online balance sheet lenders. Some of those are in partnership with larger institutional investors as well as in banks. Again, those are more sophisticated, more in the SME. You see these more in the developed markets, but they are expanding. And then you've got the loan aggregators. These are portals where they collect information for people, and you can kind of source different loans. And they're providing services for some of the more, we see these in markets that are even for MFIs and others. Again, they're gathering data, they're gathering information, they're trying to make it in many places easier, but there are issues and challenges, particularly when you put everything down to a mobile space. How much information can you actually collect on a mobile phone? And then the last group that I think is important is the rise of what I call the tech and e-commerce giants. These would be like Alibaba in China, their partnership with some of the others, and now in India and Lazada in Southeast Asia. A lot of these e-commerce portals now are either developing their own finance companies or partnering with others to provide financing for people who are trading online. There's a lot of rich information they're able to collect, so it makes it much easier to actually know kind of the sales volume anyway of clients. And then we've got the big tech companies who are coming to this. WeChat in China would be a perfect example, where there are hundreds of millions of people now who are part of the WeChat network in China, and many of them are actually being extended, millions of people being extended credit by WeChat, again, because of the information they have. Facebook has now recently gotten its e-money license, and we see Facebook now creating partnerships or opening up their platform to banks and others, so information is being shared, and they're beginning to look at providing credit services on the Facebook platform. That could open up tremendous opportunities for you know, literally hundreds of millions of people, but there are a lot of challenges around it. So those are kind of the five different groups, I should say, that we're kind of looking at in this space, and so if I define it, that's kind of the definition of the different players that we see in this. And then you know, we have a lot of industry associations in the more developed markets that are looking at kind of different aspects of responsible online lending. I'll talk about that more in a minute.
Great, that's a helpful clarification, John. And we do have a couple comments coming in, and a reminder that you have a question box. It says questions, but it's for both questions and comments. So feel free to participate. For those of you who are joining us, participate by typing in any questions or comments you have there, either for us to share during this webinar, or for John to keep in mind as he goes. As he moves forward through his research. Beth, do you have a question for John?
Yeah, John, something's just come up recently about interest rate transparency and the actual high levels of interest rate that we're seeing on some of these. What are you seeing in terms of how high the rates are and how well they are communicated to clients?
Well, I just came out of I was in Washington recently, you know, with all of you, and went to the Federal Reserve Bank meeting. It was very interesting to be with the kind of online lenders in the United States, and to see, you know, they have an initiative called the Smart Box, which is sort of like the old interest rate transparency campaign that was supported years ago in terms of being able to come up with a standard way of looking at interest rates. But you know, we have markets like in the case of Mshwari, where you've got flat interest rates of 7.5% per month, and you know, these are flat rates, and you know, we have so the effective rates are extremely high. You know, several hundred% for the effective rates on some of these lending, and I think the issue of interest rate transparency has become, you know, it's no different from what we struggled with, I think, coming up with standards for the microfinance industry. So I think the online lending is going to that same thing. Many of the same principles apply. I think the Smart Box is an interesting way of looking at it because it looks at it both ways, for both those who are investing, particularly in the peer-to-peer lending space, as well as those who are you know, receiving credit. So I think, again, I think the interest rate transparency is something, you know, we've the Smart Box. There's the Small Business Borrowers Bill of Rights, which Axion is a signatory to in the United States, and you have the Online Lenders Alliance Best Practices Group, and all of them are looking at this issue on include in their principles the aspect of interest rate transparency. So I think it is a relevant topic. it's an old topic, but again, for the online lending, it's all of a sudden become a new one. But the principles, I think, are important in the standards that need to be applied, need to be clear, and there needs to be, that we know what needs to be done to be able to show interest rate transparency. So, I will cover that, but again, it's very similar to what we've seen for the microfinance industry.
And this just brings up the issue, John, that of course your work is jointly part of the Fellows Program and part of the SMART campaign. So the SMART campaign is pursuing these questions as well.
Correct.
Great.
Yeah, the SMART campaign, I think, is very active with the small, or at least the Axion U.S. affiliates are very active with the Small Business Borrowers Bill of Rights. So I think that it's been good to see that Axion has been involved in some of these issues, even in the United States. So yeah, I look forward to that. I think the SMART campaign is an important aspect that, for those who are not familiar with it, it has been an important part of the industry, and I think those principles are very relevant to the online industry, which should get to know the SMART campaign principles as well.
Well, thanks, John. We're looking forward to continuing to keep up with your research as you move forward. For those of you who have typed in questions or comments, we're going to connect you with John. We can do it either now or after this webinar, so that you can start a conversation with him, and he would love to be in touch as he conducts his research. Unfortunately, we have to move on. We have a number of fellows that we have to also talk with. I would love to talk about this for the next 45 minutes, but we need to turn now to Patrick Traynor. And while we get Patrick's video up, I'm going to introduce him. Patrick Traynor is an associate professor in the Department of Computer and Information Science and Engineering at the University of Florida. He is definitely the first computer science PhD that we have engaged with at the Center for Financial Inclusion, and we lovingly joke internally, maybe I shouldn't say this out loud, but we lovingly joke internally that we've basically hired a hacker to research issues related to financial inclusion, and we're very happy to have Patrick. I should say, in case the NSA is listening, he is not a hacker, and all of this is totally legal. His research has looked at vulnerabilities in cellular networks, and so Patrick's going to be looking specifically at data security. And so, Patrick, I wonder if you can talk a little bit more about your research question, how you're framing it, and how you intend to go about conducting this research.
Yeah, so I actually want to take us out of this space for a second and have our listeners think about automobiles. And when you purchase an automobile, one of the biggest things that is considered is safety. Now, how is that safety judged? It's often judged by independent evaluators, folks who can say, look, the airbag does work, there are crumple zones, we expect it to perform this way in a crash. Well, how do you select an online credit provider? All of them will claim that they provide some means of security, but how is it that the average end user can really reason about what's going on with their data, how it's being handled, how it's collected, and how it's being used? So as Sonia mentioned, as a technologist, as a computer scientist, I'm interested in the nuts and bolts behind some of these applications. I want to know how are the applications gathering the data, how are they ensuring that the data is kept securely, that the data has high integrity so that it can be believed to make credit decisions, and how am I making sure, or how are they making sure rather, that they're not needlessly excluding folks based on bad data. Now, this approach comes from some previous work that we did. We wrote a paper last year called Mobile Money, Mobile Problems, and we were looking at traditional, it's funny to say traditional mobile money systems. And what we found was that all of these systems claimed security, but when we took a deeper look as experts, we showed that there were significant vulnerabilities. Beyond that, the policies written by these companies said that consumers were ultimately liable for any kind of loss in the system. So even though there were major vulnerabilities, major problems, things that malicious hackers could take advantage of, the end user, the folks who need these systems the most, would be in fact liable. So we want to apply these kinds of techniques into the emerging space of digital credit and see how well the community is doing.
Thanks, Patrick. And so I understand that you're conducting a teardown of mobile applications. What exactly does that mean?
Sure. Again, so as a computer scientist, of course, this is very clear to me. But what that means is that we're looking around for different applications that are available across the world in various markets, and we developed quite a set of skills in what's known as reverse engineering. So we can actually recover the code of many of these applications and see how they're handling data. We can also see if they're, say, using encryption when they send that data back to the credit provider. And that's really where we want to look. We want to see, is this data being treated as sensitive? Is it hard for somebody who might be, say, in the network to intercept that data and observe it? Is it hard for somebody who might be in the network to change that data? What about other applications on the phone? Is this information protected from them? And again, the goal here of doing this teardown, of recovering the code and understanding the algorithms these companies are using, is that we want to make sure that when financial decisions are made, they're made based on good data and good handling of that data, and such that people who actually are good candidates for credit aren't needlessly excluded from that market.
And so what do you expect to find here? Do you think that consumer data is being used for purposes beyond their knowledge in many cases?
Well, that's absolutely something we're suspicious of, and the reason why, of course, is because consumer data is being used beyond what's disclosed in traditional online markets. So anyone who's watching this call and using any free service, chances are your data is being used in ways that you don't understand, and many of the companies will say, well, the ways in which we're using your data, that's proprietary, that's our kind of our secret, that's how we monetize and stay in business and provide our service. Again, I'm less interested in sort of the opinion side, and I think there's a long debate to be had here. What I want to be able to do is boil down to the facts and say, are these parties collecting data in a responsible fashion? Handling it in a responsible fashion? Does the data really have any value such that when they make a credit decision, it's likely to be a good one? So we're looking at apps, we're already beginning our work looking at apps such as WeChat and seeing how these applications are trying to protect their users. And again, this is it's quite a manual process. Myself and my students, again, have a large framework of software and tools that we use to really reason about the applications. But our goal, by the way, overall, and I know some people get worried when the hacker or the cybersecurity guy gets involved, our goal is not to highlight folks who are doing it wrong and name and shame. It really is that we believe in financial inclusion and we believe in mobile as a platform, and we want to help all of these vendors deliver the services that they want to, do it in as secure a fashion as possible.
That's great. And I'd actually love to bring John back so that we can have a little bit of an interaction with both of you. So John, if you could turn on your webcam again, if you're still with us. I have a question for both of you. I mean, you're both doing work on responsible digital or online credit, but who is responsible in this case? Is it that the industry needs to ultimately develop their own ethical code, or is it the job of policy and regulation at the end of the day to address some of these concerns? I mean, clearly you both have some expectations that you're going to find that the industry is not being responsible, but who needs to care at the end of the day when you're done with your research?
So I'll jump in first. I think that in many cases the industry wants to be responsible, but I think it helps to have a wide range of parties looking to ensure that everyone is responsible. Again, it's easy for anyone to claim, well, we're secure. It's another thing to actually try and provide secure services. So in my work in the past, I've tried to work across a number of different stakeholder communities. I was at the ITU in Geneva last week, working with regulators there to try and ensure that the right kinds of policies were in place across many different markets. I've also been working with the GSM Association and the academic communities to try and bring both an industry and academic focus to ensure that lots of eyes are watching and that the positive lessons learned in one of these spaces can be applied across many others.
I agree with Patrick. I'd further mention there's also a role for the consumer, but so I would say that it's the industry. What I'm seeing is the industry, particularly as they get more sophisticated, there are more players. People are wanting to protect themselves from certain players that may be out for a quick buck. We've seen these challenges in other markets. One of the reasons the SMART campaign was developed was really to kind of bring industry around certain principles. So it's oftentimes them coming together. So I think they're important. Regulators and policymakers have to be involved, I think. They should also be there. There are, and lastly, I think, particularly for this space, a little less so for the mobile data, those who are, at the base of the economic pyramid, but when you start getting to more people who are actually beginning to move online and are able to, look at Yelp reviews and Facebook likes and different ways of rating these online, kind of like an Uber type of concept. We're actually beginning to see that people can actually start to share information, whether a mobile, especially in the mobile phone, about their providers, and can more quickly react when they see something that's not going the right way. So I think, and so consumers need to understand also what they should be looking for. I think many of them, particularly in the online space, you're beginning to see seals of, like an industry seal that they're trying to move for the Online Lenders Alliance, for example, that says, I follow best practices, and they're actually putting that on the websites now. And people are looking out for that when they're comparing one lender and against another. So I think consumers will also be much more actively involved, and as we get more sophisticated, people will begin to understand what it is they should be looking at as well. So I would say it's kind of all three, and it's important that this research be shared among all three groups and made aware to the widest audience, including the public, Consumers International and some of the others that get out this information to consumer groups around the world.
So I think, if we think back at the Volkswagen scandal, it was researchers at West Virginia who are really tearing apart the software inside the cars that found the cheating on the diesel engines. And so, Patrick, I don't know if you're going to score such a big coup, but I think you're playing an analogous role. It's very important.
I appreciate that. And again, I hope I hope we don't find anything quite like that. That was certainly a serious ordeal. You can see that, by the way, that by Volkswagen by not being honest, they now are on the hook for billions in losses in multiple markets across the world. So hopefully we won't see the same kind of thing here. But having independent sets of eyes verify, that's just a good thing. Transparency is really a plus.
We have a question that came in about specifically a market like Nepal, and I want to expand on, I'll read it out and then I'll expand on it a little bit. So the question is, digital banking seems quite easy banking or simple or cost effective, but how can it be implemented in a country like Nepal where illiteracy is very low, since the microfinance works with the lower section of the people? And I think this question underscores some of the concern when folks say, well, consumers should be the ones that should really be discerning. And consumers are the ones who have to make good decisions about the products that they use, and so maybe the industry shouldn't be so concerned about what they're doing with data. They should just expect consumers to understand that. Can you respond to that question?
I think you're on mute.
John, I think you're on mute.
Okay, can you hear me now? Yeah, I think, you know, as I said, all three have responsibilities. The providers need to be able to provide information in a way that is suitable for the markets that they're operating in and the level of the clients they're operating in. If these are relatively lower income, less educated people that they're primarily targeting, there is a heightened responsibility that they have, and the rules have to be stated in such a way that you're taking into account kind of the target market. So it's not a one size suits all. This is not like a, you know, a traditional. You really have to be able to look at the, you know, appropriateness and the proportionality of the policies that you're implementing. The regulators take this into account too. So Peru, if they are receiving complaints about a particular industry player, and it may not, you know, again, it may not be something that was clear to them beforehand. Maybe there's not a rule on it, but if they start seeing that, then they're very quick to react to that. And so Peru's a good example of a regulator that really has a good consumer protection department. We see this in others too. So I think regulators and policymakers need to be able to have that as you said, independent kind of third-party objective role, you know, or an ombudsman or somebody. And there has to be regular follow-up with, particularly as we see in the digital space, these can scale very quickly, like what's happening in Kenya. So I think there is a lot going on. Mshwari brought in almost 10 million people, many more than the microfinance sector had ever brought in terms of access to finance. And there were a lot of issues around that. And so the industry is now reacting to that. We know a lot more now that it's happened, how to potentially avoid this or minimize some of the risks that we see. So I hear you on the Nepal side. Again, it all depends on the markets that you're dealing with, and the lower you go, the more responsibility there is for the regulator and policymakers, as well as to ensure the industry is abiding by basic principles.
Yeah, I want to add what John said, and also just follow up for our viewers out there. How many of you actually read the software terms of service on the last application that you installed? You know, we would like for consumers to be absolutely informed and to make decisions, but you know, in the traditional developed world, we don't necessarily do that either. So why should we expect that in many developing economies, all of a sudden they're going to figure out how to do this properly? It really, you know, it really requires those three thrusts that John and I both talked about, and having those independent eyes watching and helping, such that, you know, when a consumer makes a decision, it's often very quick. And the hope is that they make decisions based on communities like ours pushing the industry in the right direction to ensure that the consumer is indeed protected.
Thanks, and I should mention that question came in from Man Bishwakarma, just to credit the asker of that question on Nepal specifically. Patrick, you mentioned that you were just at the ITU in Geneva, and we have a question from Azim Lila about what is the ITU doing around financial inclusion? And I guess this question could be applied to other similar organizations. Is it on the GSM and network access side, or is there more to this around digital payments?
Sure. So actually the ITU, in cooperation with the Gates Foundation, has just finished a pretty massive 2-year effort in the space of digital financial services. And this is everything from financial inclusion to interoperability. And myself and my colleague Kevin Butler were helping to run the security track to force new vendors into thinking about, you know, what are the properties that we need to guarantee in order to protect our consumers and ourselves, by the way. So the ITU is in the process of putting all of these documents online. I believe there's something like 25 reports for each of the areas that were covered, and I strongly encourage you to take a look at these documents. I can follow up with Sonia afterwards and provide some links, but again, almost all these documents are now available online and should be finalized within the next week. The hope is that for folks who didn't attend, they can provide a set of guidelines for you in a wide array of areas of DFS.
That was a nice summary. The CFI and the SMART campaign have also been involved in the creation of that, and we've been really excited to get to the end of the process and have all of these reports to reference. And that brings me to our last question from Carlos Monteverde, which is, in your experience, and this is a question for both Patrick and John, what has been the general government involvement to the adoption of digital financial inclusion in recent years? And specifically, it's a really messy space, it seems like. I mean, there are the ministries in ICT, ministries of finance, central banks involved. What does that process look like, and how does that contribute to the direction that digital financial services take in some of these emerging markets?
Yeah, I can mention, you know, I was very involved with AFI in the whole digital financial services working group, where we work with policymakers and regulators. And I've been recently involved quite a bit with a lot of different governments who are also interested in looking at this. I think people see now that digital financial services is the best way to expand financial inclusion. I think they're also beginning to see the role that it can play in not just financial inclusion, but inclusive economic growth. So there's a keen interest in this from all governments that I've been connected with, and you know, India is a prime example of a government that's really pushing this. But all over, I'd say, everywhere that I've been recently, there's really been a push, particularly I would say in Africa and Asia and Eastern Europe, toward kind of moving toward the whole digital space for everything from electronic payments to the whole digital finance space. So I think governments are looking at this. On the policy regulatory side, one of the things that Patrick mentioned that ITU is involved in is not, you know, they're looking at more of an interconnected world, but they're also looking at this really pressing issue, which I'm preparing a course right now for regulators, and this came up as an issue for regulators around the world on digital financial services, which is regulatory coordination. So just coordinating between primarily the ministries of telecommunications and information technology, the financial regulator, the competition regulator, sometimes potentially the Ministry of Economic Development or finance. So in Indonesia, for example, it's a big challenge because there are two main players in the financial regulatory space, which both have departments of fintech right now that are both coming up with rules on fintech, and you know, so there's some concern about regulatory collaboration and coordination. So that is an area that you know, again, there's almost too many players, too many chefs, and I think what we're going to see is sort of a lot of discussion about how to coordinate these policy efforts both on the government side as well as in the policy regulatory side, so that everything can kind of move. It's not moving as well as it could right now, but there is a lot of interest and discussion in getting government and particularly the policy regulatory environment to provide an enabling environment. So I think that's what I'd say. There is a lot of interest. It's at different levels in different regions and different countries, but everybody's talking about it.
Yeah, actually, I think one of the enforcing functions in this space, John, I'd be interested to see what you think about this, is interoperability. So at the ITU last week, a number of folks from African nations were saying, well, we have people who live near a border and regularly transit back and forth, and you know, having a uniform policy and payment environment, regardless of who the provider, the cellular provider is something we really need. And I think that this sort of decentralized, you know, everyone trying to come up with their own policies is really going to start moving to a more centralized model where once services start to really interoperate, we'll see people actively learning the lessons from each other and trying to deploy more universal policies and procedures.
Well, thanks so much, Patrick. Thanks so much, John. And again, we look forward to keeping up with your research as you move forward with these two topics. We're especially looking to see what the interplay is here. I mean, clearly it seems like there's a lot of ground to cover and some overlap and ways that your research is going to inform one another's. We have gotten a few additional questions, and those that have come in, questions and comments, we're going to pass on directly to John and to Patrick, and are happy to facilitate a conversation between you as you move forward. So thanks so much, John and Patrick. I'd like to turn now to our next research question, which is, what does human touch look like in a digital age? And I'm going to first go over to India to our fellows Misha Sharma and Shreya Chatterjee that are doing a joint project in India. Misha and Shreya are based out of IFMR Lead. And so let me, while we pull up their video cam, or their videos, oh, it looks like we have that up. That's great. I'll introduce them. Misha Sharma is a project manager at IFMR Lead, and she works with the financial inclusion team. She primarily looks at alternative channels of financial services for the poor. So thinking about what human touch looks like as India transitions quite quickly, actually, to a digital age. Her focus on alternative channels of financial services is quite appropriate. Shreya works on impact evaluations of alternative financial delivery channels and livelihood rehabilitation programs in partnership with NGOs. So Shreya really brings the consumer focus here. We're looking forward to Misha and Shreya exploring this question of what human touch looks like. And let me just add that Beth and I were in India last week, and we were just astounded at the pace of this transition to a digital age, with the Prime Minister taking out about 85% of the currency out of circulation overnight. And it seems like the country is rapidly, out of necessity, shifting to digital financial services. And so we didn't know this was going to happen when we selected Misha and Shreya to study this question, but it seems like a very critical question right now in India. So Misha and Shreya, I wonder if you can talk a little bit more about the question and share how you intend to find the answers to this question.
Sure. Thank you so much, Sonia. Just a quick question. Can you hear me?
Yep, we can hear you just fine.
Okay, great. So yeah, just to give the audience a little background, and wanted to share some statistics on what the financial inclusion space in India looks like. So as per the latest survey done in this space, around 49% of Indian adults are digitally included. That means that they have digital access to a financial account. However, as we all know, the usage of these digital accounts remains debatable, and very little data exists around this. Some people also use the definition of digital access to be mere access to debit cards, and that presents a very distorted picture, since low-income households, especially those residing in rural and remote areas, find it extremely difficult to access banking services, let alone withdrawing money from ATM machines. Also, as we all know, very few people use and know about mobile money in India, and only 2% of the adult population have a digital access to a NBFC microfinance institution account. So to sum it up, really, it is fair to say that digital financial inclusion for the unbanked or low-income households is yet to take off in India. And it is in this context that the human touch interface that is required to transition the unbanked and digitally excluded population to the world of digital financial services is extremely important. Now, as we all know, there are several benefits and pitfalls of deploying human touch in digital financial services, and it is therefore important for the service providers to be cautious and arrive at the optimal mix of human-centric and technology-enabled digital financial solutions. So through this study, we're trying to look at two broad questions. One, what is the different channels of digital financial services that are available for the low-income segment? And second, what are the key challenges and opportunities for these financial service providers? So to answer these questions, we're really looking from a supply side, and we look at three main financial institutions that cater to the financial needs of poor and low-income households, namely banks, microfinance institutions, and payment banks. Now, each of these three types of financial institutions deploy human touch agents to reach the last mile user, and we propose to survey them to understand the ways in which human touch agents facilitate transition from manual to digital transactions. So just to elaborate that on that a little bit, banks deploy business correspondents, and microfinance institutions typically deploy credit officers, and payment banks, deploy these, which have just recently been launched in India with the objective of providing basic financial services such as savings and payment services, deploy the last mile agent network. So through these three human touch points, which is the business correspondent, credit officers, and the last mile agent networks, we are trying to sort of answer the question of what an optimal mix of human touch would be for these low-income households who don't yet have access to digital financial services. And we are trying to understand these channels by using in-depth qualitative interviews among the management officials, also among the branch managers who actually run these different branches. And we are primarily also aiming to interview or survey the human touch point themselves and ask them what the challenges are that they face in basically following the different processes, and how they view consumers' readiness and willingness to transition from cash-based to a cashless society. So that really sums the research question. Sonia.
Thanks, Misha. And can you tell me, what is your hypothesis for understanding which population segments will want and need a human touch more than others? So if you were to just venture a guess for the kinds of customers that will need a little bit more hand-holding in this transition to digital, what would your guess be on that?
Among low segment households as well, there are definitely low income households as well, there are definitely segments where it's relatively harder to onboard them onto digital platforms. And we would think that women in India, given that women are 29% less likely to own a mobile phone, only 17% of women have access to the internet, and 43% have access to bank accounts. So, and these are prerequisites that you need to even get on board any kind of digital platform. So we would assume that women are definitely one of the target groups that are going to need excessive attention from human touch points. Apart from this, informal sectors where essentially the wages as well as all the business related transactions happen in cash, those are again problematic sectors where given that cash is the incumbent, it's difficult to convince them of the use case of digital products. So this would include migrant workers, this would include small vendors whose consumers might not accept cash, and essentially anyone who does not get paid through their bank account is someone who's going to A, be convinced, and B, be helped excessively. A third group would be people who are in geographically remote areas. They might not have access to the touch points that we're talking about. Again, individuals who are low on even basic literacy, financial literacy, and digital literacy are groups that are going to require specific attention and a specific kind of customer service. So these are the groups that we feel largely are going to require most of the attention of human touch points.
Thanks, Misha and Shreya, and I'm going to come back to you in a moment, but first I'd like to turn to Alexis Beggs-Olsen. So we're going to move from India to Kenya just for a minute here. Alexis is an independent consultant. She has 20 years of experience working to build the capacity of financial inclusion institutions and social benefit organizations. And she's going to be looking at this question of human touch in a digital age in Kenya, and looking at it a little bit differently than Shreya and Misha. Alexis is currently researching and developing content for the Africa Board Fellowship program, so she does have experience with the Africa market, and she's affiliated with the Boulder Institute of Microfinance. She's also been a technical advisor for Opportunity International and has worked in 28 different countries. Welcome, Alexis. Alexis, could you talk a little bit more about how you're framing the question and how you intend to go about finding the answers? Alexis, I think we're having a little bit of an issue with your sound. Are you, is it possible? There we go. Okay, great.
Okay, sorry, I was still on mute. I am going to be looking more at the demand side of the question, and I'm going to start by diving in and really talking to the people who are experts in this in Kenya. It's a very mature market. It's been about 10 years now since the advent of M-Pesa, and we all started on this journey towards digital financial services, and there's still a lot of innovation that's happening in that market. I think this question is really at the heart of responding strategically to market disruption. So I'll be reaching out to a group of experts based in Nairobi, as well as about 8 financial service providers. Half of those will be the low-touch disruptors, more of the fintech and digital providers, and then half would be traditional higher-touch microfinance organizations. So first start by talking to the providers and finding out from them what are they doing related to human touch, when do they consider touch to be necessary from an operational perspective, when do they think that their clients want human touch, and how do they know that, how do they go about finding that out. And then I'll be talking to the clients themselves, and most of my time will focus on this demand side research. I'll be doing 80 in-depth interviews with clients. About 2/3 of those will be sourced from the financial service providers I'll be working with, and about 1/3 of those I'll source independently. And I'm going to be using a service design approach to really dive in and understand at a very granular level just the experience people are having when they're using these products, both traditional and the new breed of products. And there's a whole spectrum, actually. There's kind of a whole range, so everywhere in between as well. And I'm going to be doing a service design exercise of actually mapping their service experience, and then in developing that map with each client, looking for pain points, looking for wow factors that are really, aspects of the service that are delighting them, and then talking with the clients in more depth about how human touch or the lack thereof either contributed to their frustration or to to their happiness with the service. So it'll be a kind of a process of talking to these 80 people and then kind of pulling out the patterns that I'm seeing.
So it seems like, I mean, similar to what Misha and Shreya were saying, customer segmentation would be pretty important to understanding effective human touch, given that some customers would want a lot of help and hand-holding, and others might be willing to just dive into a fully digitally based service. So what kind of segmentation are you considering as you create your design for your research?
Absolutely. There's a lot of ways to segment clients. The primary segments I'll be looking at in my research are how groups of clients with lower levels of education, as well as those that are newer to the formal financial system, segmenting them to understand how they want human touch and how those factors affect their desire and the kind of touch that they want. And then I also really want to segment the customer experiences I collect, not just by who the customers are, but specifically what are they trying to do in that moment when they reach out for a financial service. And a couple of years ago, Harvard Business Review published an article titled Surviving Disruption. Clayton Christensen was one of the authors of that. And the idea, the primary idea in the article was that disruption can be fast and complete, or it can be slow and incomplete. We know disruption is happening, but we don't know the extent to which it will either certainly modify, but will it completely change how financial services are being offered among the providers as a whole. So really understanding what your client is doing when they purchase a service from you beyond just who they are, and then identifying which of these specific jobs could be done more easily or conveniently or affordably by a disruptor. And in knowing specifically what is your customer doing, that helps you identify your own advantages and areas where you might have vulnerability to disruption. And for the disruptors, it provides also great information on specifically what, where their market segment is.
Thanks, Alexis, and I'd love to bring back Misha and Shreya because we've gotten some questions that have come in. I'm gonna ask the first one because I think it's relevant to both the India and the Kenya market. And the question is, it comes from Mariah Mateo Sarpong, and the question is, will human touch be analyzed according to what kind of financial services offered? For example, she works in insurance, which is often difficult to understand, so might require more touch than a service that that consumers are very used to, like credit. So when these things are delivered digitally, are there products that might be more or less where it might be more or less necessary to employ heavy human touch?
Right. Definitely. I think, that's the aim of our study because, we do understand that, like Shreya was mentioning, different people need different levels of human touch. And Shreya just elaborated on the, group of people who might need more human touch than others. And this will also be applicable to different digital financial products. So just for, if we take a step back and think about people in India who are, in the middle income category, they have access to digital financial services, but, they require very minimum human touch because they're able to, sort of understand what the different processes are. But when there's a grievance redressal or when we want to buy a new product, then we, dial the call center and ask questions, and that's when human touch comes into play. So it definitely depends on the products that are on offer, and I think we'll be able to evaluate this question more through the different channels that we are targeting in the study, being banks, microfinance institutions, and payment banks. Because each of these three channels are, even though offering similar products, their processes are different. So and their customers might also be a little different. So we might get to see what the different levels of human touch are that are being provided.
So our study looks at savings, payments, and credit. We aren't looking at insurance, unfortunately, but given that online credit and these are all new things, we expect to be some sort of difference in the way the product is delivered and in the way the customers are got on board with it.
And I'll just add that most of my research will focus on savings and credit, but also hoping to connect with one or two insurance digital providers in Kenya. There's some really innovative work being done there. Linda Jamii with health, Kalimo Salama with crop insurance, Safari Bima with personal accident. There's Chamgamka, which is health for childbirth, and Akiba Shore. So there's a lot of innovation happening in this space. But given sort of the size of that market relative to credit and savings, I'll probably just reach out to one or two of those.
Yeah, I mean, as somebody who's worked in this the space for a while. I just have to say, Mariah, poor insurance. Insurance doesn't seem to be super central in much of the work that we do, and I think your question is a reminder that we need to continue to to remember insurance when we do research, and I'm glad Alexis is incorporating that into her her research, especially given the innovations in insurance in the digital financial services space. I want to ask the three of you about why financial services providers should care about human touch. What kinds of competitive advantages might they derive from employing human touch, particularly since going full digital is a huge cost savings to them? So, I mean, at the end of this project, when we disseminate the results from your research, why should financial services providers care? Alexis, I think you're talking, but you might be still on mute.
I'm on mute again.
All right, there you go.
Thank you. So as I was doing the literature review, as the first part of my research, I came across FSD's Kenya Financial Diaries, which are just an incredibly outstanding resource. And in their report, they concluded that there are a dozen specific financial management jobs that low-income people need to do. Simplifying them, you can put them into the categories of accessing short-term liquidity and making long-term investments. And certainly for the short-term liquidity space, there's kind of a clear argument that, clients probably don't miss anything about human touch as long as they can access their money safely and immediately. But for longer-term liquidity questions, and this is the space that microfinance organizations have traditionally operated in, I was really intrigued that at the end of their report, they made a set of recommendations basically providing suggestions to help make banking work better for low-income people. And looking at the question from a human touch perspective, most of their recommendations certainly can be accomplished digitally, but it struck me that there is space for competitive advantage based on their recommendations, that human touch could lend itself particularly well to a certain competitive advantage. For example, they recommended that banks signal welcoming of small values and celebrating small achievements, which certainly can be done through a text message, but if you think about welcoming and celebrating, that's also something that, can be done person to person in a much richer, deeper way. Improving price transparency, as Patrick was talking about, is critical that happen digitally. But if you think about the heart of transparency is building trust, and relationships are a very kind of foundational way to build trust. And then improving service excellence, which can, mean a lot of different things, but respect might be at the heart of that. So, the human element of respecting the client, I think, is a tremendous opportunity for competitive advantage. And then incorporating flexibility into product design. So the responsiveness, that can also be automated, but if you think about sort of the responsiveness that we have as we interact human to human, that can be a competitive advantage as well. And if you think about this webinar, I mean, this has been amazing for me to see the other fellows, to hear about their projects. I feel like it's a much richer conversation than just a phone call would have been with all of us on it. But when you compare that to, I'm seeing other fellows, but there's, close to 100 people out there that I'm not seeing, and for me to sit across from you face to face over a cup of chai, we would be having a completely different experience. So I think it's really an issue of financial service providers figuring out when, for their clients, when do they want touch in trust building, in troubleshooting, in providing advice. What kind of touch do they want, and when do they want it?
India is so large, both geographically, even within the low-income population, you have such a diverse set of people. And at this point, given that the government is pushing digitization so vehemently, we're trying to get a lot of people on board. And at this rate, given our digital literacy, given our previous experience with digital products, we mostly transact in cash. And there's a lot of scope for error. And at the same time, there are a lot of financial service providers in the space who are trying to outdo one another in providing better products. So even within the mobile wallet space, every day there are different cashbacks, different discounts, different incentives to use one's product. So in this scenario, we feel that a financial service provider who can get human touch right is going to, in the long run, have a larger user base and a more loyal user base. And this is why we we feel that if we were to sort of bring out where exactly human touch agents are struggling and where exactly they need help, whether it's in terms of training or whether it's in terms of logistical issues, if we can bring that perspective in terms of to the financial service providers, we feel that we could make useful recommendations that they can then include in their service delivery and finally improve the status for consumers as well.
Yeah, and just to quickly add to that, I'm thinking that this might just be in the short run that we need human touch agents. And like Shreya was saying, right now there are so many different products in the market that, and of course we're trying to include the low-income population into the formal financial services, that this guidance is needed. So I'm thinking that hopefully this is just a short-term thing, and maybe who knows, 10 years down the line, these segment of people might not require human touch, and for all we know, we're probably, I mean, if I may say, romanticizing, this whole concept of human touch, because, I'm sure we'll agree that people like us, attending this webinar don't really need any or don't have any time for human touch in the financial transactions that we make day to day. So, for all we know, maybe, in the short term, it's very beneficial, but in the long run, maybe in 10 years down the line, the consumers would have transitioned, to a digital platform easily, and human touch won't be required anymore. Could be possible.
This is Beth. I would just like to ask any of you what role you see for this human touch versus what can be provided electronically in terms of enhancing financial capability of consumers.
That's a great question, and I think it will be interesting as I do the interviews to ask people questions about, just to understand how much they understand about the services that they're using. Do they understand the interest rates? Do they understand what they're paying relative to other products that might be available to them? So I think that will be, and I'm actually really looking forward to hearing about Justyna's project, who will be focusing on financial capability and the intersection between that and the research that we're doing, because I think there's a lot to talk about there.
In India, at least, financial literacy to a large extent has focused on what is savings, what is credit, when should you be taking, when should you be taking loans, what kind of savings should you be having, things like that. At this point, I think there are a few people who are trying this, but the need of the hour is that the financial literacy that's dispensed has to be more practical in terms of, how do you carry out a transaction using an app. So this information is available online, but it's not, this is one thing we want to see in our interviews on how much do management level officials and branch managers stress on training their last mile agents to dispense this kind of training where, this is how you use it, and that's sort of a angle to the entire financial capability side.
Thanks so much, Alexis, Misha, and Shreya. We've had a number of questions that have come in, but unfortunately we don't have a lot of time for them, so we are going to connect the three of you with the folks that have asked questions, and they're questions that are more on the research process and the research design, and so I think those are best answered in a personal conversation, and But those things that come out of your conversations with them, if it's something significant, we can go ahead and share that with everybody as you move forward. And I understand that all of our fellows are going to be producing blog posts along the way to share midway through the research, the results so far of their research, give you a little preview so that we're not just waiting until the end and saying, surprise, here are the results, but so that we're really sharing results along the way. So we look forward to that, and hopefully that'll address some of the questions and then incorporate some of the comments that we're hearing from our audience. I'd like to turn to our the last fellow, last but not least, the one that we haven't heard from, Justyna Pytkowska. Justyna is at the Microfinance Center in Poland. She manages research projects. She's the author of an annual publication on the state of the microfinance industry in Eastern Europe and Central Asia, and has a broad purview for her work. She conducts market research on the demand for microfinance products and has a particular focus on financial health and financial capability. Justyna is going to be doing work on the business case for financial capability, and this comes in part because we at CFI have been looking at financial capability for a number of years now, but what we've been hearing from financial institutions is, like, why should we care? What's the business case here? Why should we take on financial capability as something, as a value add that we offer our customers? And Justyna has bravely offered to take on that topic. So welcome, Justyna. I wonder if you could share a little bit more about your research question and talk a little bit about how you plan on answering this question.
Hello. Yes, the reason I got interested in this subject and would like to do the research on this is the fact that more and more institutions in our region of Europe and Central Asia take up projects related to financial education, financial capability building, because they more and more recognize that in order to improve financial inclusion, it is not enough just to build better infrastructure and offer better products. There is a huge need to prepare the clients for using the products to the benefits of their households and businesses. So we can see that more and more institutions start experimenting with financial capability programs, and often they are supported by donors or investors who are also interested in increasing the capability of the population. And it often happens that after the end of the pilot project everything is dropped and the institution fails to incorporate it into their core business or deliver it in any other way, but on a sustainable basis. So my interest is to look for the institutions and document the cases where the financial institution delivers financial capability intervention on a sustainable basis. And I already have developed several hypotheses which I'm going to test during my project, and they include financial capability activities can be provided sustainably, but there is a trade-off between the depth of the engagement in financial capability interventions and the business sustainability. And also that not all costs can be absorbed by the financial institutions. So in some cases there is a need to build partnerships and share the costs. Additionally, I'm going to test the hypothesis that in order to deliver financial capability activities sustainably and on an ongoing basis, there is a need to align the strategy for doing it with the strategy of the institution, its vision and mission. And finally, I'm going to look at the business model of the core operations and see to what extent the business model of financial capability intervention fits into the core business model. So as I said, I'm going to document viable business cases of financial capability interventions. And I'm going to do this first of all by looking at the range of financial capability interventions that take place in the region of Europe and Central Asia right now, and look at the range of the interventions in terms of the topics, delivery models, the scale or the scope of engagement of the financial institution, and the intensity of the engagement of clients in those interventions. And once I do the overview of the sector, I'm going to focus on the institutions and their programs which look like a good business case and deepen the understanding of how they deliver financial capability interventions. And eventually I'm going to document about 6 cases, and the criteria for the selection of those 6 cases include the permanence or the continuity of the intervention. So in other words, I'm not looking for donor-funded pilot test projects. I'm looking for those interventions that are planned to be implemented on the ongoing basis. Also, I'm going to choose the cases which have already reached the scale or have the potential to reach the scale. Also, I'm going to choose the interventions which have the potential for replicability, and also those which introduce innovation or apply best practices. And the way I'm going to describe those cases is by using the business model canvas. So I'm going to look at the financial capability intervention or a set of interventions within one institution through the business modeling tool. So look at what kind of client segments are served, with what kind of services, what resources are committed to delivering those interventions, what partnerships or what support organizations are involved in this, and also look at the financial side, so the costs and the revenues. So I'm going to document about 6 cases, and of course during the timeline of the project I'm going, as it was mentioned earlier, I'm going to do some blog posts and information disclosure as I go on from one case to another. So,
and Justyna, am I right, Justyna, in my understanding that you haven't selected all of the 6 cases so far?
No, I haven't selected this. I have already mapped the financial capability interventions in our region, so I know which institutions deliver them and in what way. And then now I'm in the process of narrowing down to I found more than 25 institutions, and now I'm in the process of narrowing down to 15 ones that are sustainable, and they go beyond product description and sales, because often we can see that financial institutions call that what they do in the sales process, like explaining the contract and the terms of the loan, they practically do this sales process, and they call it financial education. And of course, recognizing the need and the necessity of explaining the product terms and being transparent, we would like to look for those cases which go beyond the explanation of the product terms. So with the 25 institutions that I already identified, I think that I will have to narrow down to those which do more than the transparency of the product terms. And then from those 15 I will move to the 6 ones which are really strong, which are replicable, which are ongoing, and have use the best practice or are innovative, so that they can be replicated by the other institutions.
I love that. Sometimes institutions call sales financial capability, and I think that's
Yes.
very accurate, and yeah, and a little bit of a wake-up call for some of us who are sitting here in think tanks and not working in institutions. That's a really nice reminder, Justyna. And I should mention that, you know, we had our poll at the beginning where we asked who everybody was, and the majority of people who are listening are actually from financial services institutions. So if you are from a financial services institution and have a sustainable financial capability intervention that you would like to be considered, Justyna's nodding her head. We didn't plan this in advance,
yes.
so I wanted to make sure I had her approval. But if you have something that wants to be considered, feel free to let us know in the comments, because we can be in touch with you on that. We have a question here from Otila Manta, and the question is, Justyna, do you believe it's possible to develop a microfinance research project with the European Microfinance Network and others? It sounds like Otila actually does think there might be some way for them to be involved in your project. So I'll connect with Otila with you after this call. I have a
Basically, we are looking for institutions which are interested in participating in the project. So either financial institutions which are engaged in financial capability interventions, which would like to be our case, our business case, which will be described in the project, and also we are looking for partnerships and cooperation with the other institutions which can help us identify those business cases.
Justyna, I think we say, like, what's the business case for financial capability? And we think it's going to be a very simple question of looking at a balance sheet. But then, you know, as you start talking about it, it becomes clear that it's a very messy question, because there are a number of different products that people are using. Financial capability interventions are not uniform. There are different variations that cost different amounts of money. So I wonder, what are some of the challenges that you foresee from your research? Do you imagine that you're going to have trouble with getting data from institutions? Do you imagine you're going to have trouble with analyzing that data? Do you imagine you're going to have trouble with generalizing those findings so that other institutions can take what you learn and apply it? Can you share a little bit more about the challenges that you foresee in your research? And I'm going to have to ask you to keep your answer to only 2 minutes so that we can wrap up on time.
I mean, the first challenge is to find good business cases in the region of Europe and Central Asia, because there isn't many institutions which do financial capability interventions on an ongoing basis. There's quite a number who started, who experimented, but we don't yet see whether it will be continued. So it's like still a pilot project. So that's the first challenge, that there isn't too many cases. I hope I will not have a problem with convincing the good ones to share the information and to be my business case, which will be described and then disseminated. Because I think it's also in the interest of the institution to share good practice and to be featured as the leader in the field. As I say, there isn't too many good cases, so I hope there is an interest among the institutions to do that. And also I work for a network of microfinance institutions, so we have quite good relationships with our members. So I hope that this will also increase my chances of getting them on board.
Thanks, Justyna. And a reminder that if you want to be involved, let us know. While Justyna was talking, 2 of our fellows wrote a message to us here at CFI and said, anybody who wants to be involved with these topics, please put a note in the comments so we can be sure to follow up with you. This isn't a program in which our fellows go into a room without windows and shut the door and then come out at the very end and share their findings. This is a program where the fellows really genuinely want to connect with all of you as they go about their research. And so we'd love to have you involved in any way that that you see fit, whether you're a financial institution that wants to be part of the work, whether you're somebody who just wants updates as they go along because the work might be relevant to what you're doing. I'd like to wrap up now. Thank you so much, all of you, for joining us. This has been a really wonderful hour and a half. Once we're done, there's a survey that's going to pop up. Once we're done, there's a survey that's going to pop up on your screen. We want to hear from you about what topics you want to stay informed about and whether the webinar has helped to increase your understanding of these topics. Please feel free to stay in touch with us. We have a link on the screen where you can sign up for additional updates. And we're looking forward to being engaged throughout this program. So thanks for joining us, and we look forward to hearing from you.